This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
Carol Massar, Tim Stenivek have a well-deserved day off here on the eve of Christmas Eve. I'm Romaine Bostic.
I'm Caroline Hyde.
Great to have you, and I'd love to see you in the Christmas red today.
Look at the poinsettia you got going on. You got teddy bears. We've got a Santa rally on our hands too.
We do have a bit of a Santa rally on our hands here. This is what everybody's been waiting for, the idea of where we close out the year. A year that's been incredibly volatile, as you know that. I don't know what your expectations were in January, but
quiet.
Yeah, exactly. But whatever your expectations were, they got blown out of the water. But if you're an equity investor, assuming that you rode this wave for a good portion of the year, you're doing pretty well.
You're doing very well if you're in tech. You're up 20% at least on the NASDAQ 100. The S&P 500 at a new record high. I'm looking at what's driving us on the day, and once again, it's kind of what's worked all year. It's semiconductors. It's the picks and shovels of AI. You've got Marvell leading the cause. We're up 3%. You've got NVIDIA, Broadcom, Amazon doing particularly well. We've also had a little bit of M&A. ServiceNow completing on that deal that Bloomberg broke to begin with.
ServiceNow. We're going to talk to the Chief Operating Officer a little bit later on Bloomberg Television. And also just this idea that a lot of that deal activity, this kind of surge that we've seen in the second half of the year, everyone really expecting that to continue, Caroline, into 2026.
We've got so much to be digesting throughout the show. You're going to hear a little bit about real estate. We're going to get you into diversified assets. We're going to be talking crypto as well, because that's not been a totally perfect trade for those who are along this particular asset class. Some billionaires win, Romaine.
Yeah.
Some billionaires don't.
We're also going to talk furniture.
Actually, that.
Which I always love a good read on the consumer, and especially like furniture, because that's one of those things you buy like once every a few years or
You're
something.
using that credit card.
So, I don't know.
Buy now, pay later?
No.
No.
How dare you? By the way, I just noticed your earrings. Your Santa Claus. Your Santa hat earrings.
For all you radio audience, I've got some jingle jangle on today.
All right, we got a lot to cover here. First, though, I think we want to get over to Charlie Pellet, right? He's standing by right now with a closer look at what's going on out there.
Thank you very much. Happy holidays to you both, Romaine Bostic, Caroline Hyde. They got you covered right here on Bloomberg Businessweek Daily. Right now, the Dow, the S&P, NASDAQ, all pushing higher. I'm looking at a record on the S&P, 6904, where we stand right now, taking out 6901. Will the record stick? Got to keep it locked into Bloomberg Radio and Television right through the close and beyond. S&P right now up 26, gain there of 0.4%. Dow up 109, now up 0.2%. NASDAQ Composite Index up 105, gain there of 0.5%. NASDAQ 100 Index up 0.3%. But perhaps a question for our market guest today, what's going on with the Russell 2000 Index? Small cap shares trading lower. Right now, that index down by just about 0.6%. The Bloomberg Mag 7 Index is techs rally up 0.7%. Your 10-year 4.16%. The 2-year 3.53%. Gold is surging 1%. Record there 44.89 the ounce. West Texas Intermediate crude oil up 0.6%. 58.34 a barrel. Bitcoin right now down 0.3%. Slump for Bitcoin at 87,949. Novo Nordisk shares now surging 7.1% after winning approval to sell a pill version of its blockbuster obesity shot Wegovy in the U.S., a crucial step in its effort to defend its market share from rival Eli Lilly. Lilly again down 0.3%. Novo Nordisk up by 7.1%. And Treasury Secretary Scott Bessent is backing the idea of reconsidering the Fed's 2% inflation target once the U.S. has sustainably brought price increases back down to that pace. He made the comment on the All In podcast. So again, recapping here, the Dow, the S&P, NASDAQ, all higher. S&P 500 index up by 0.4%. Bloomberg Businessweek Daily continues right now. Back to go your hosts, Romaine Bostic and Caroline Hyde.
All right, thanks there to Charlie Pellet, and not to be smug about it, but the fact that we've been above the Fed's inflation target for 4 years, I think the market has decided we've moved on from that 2%.
Sorry, Scott Bessent.
Yeah, sorry. We did get some economic data that could maybe potentially shape what the trade looks like into 2026. GDP growth, fastest growth that we've seen in quite some time, assuming you believe those numbers. Consumer spending holding up as well.
Consumer sentiment less so, but all of this is dated. How does that push us forward? And I'm going to be a broken record, Romaine. AI really helped with the GDP figures. that old infrastructure build out?
Not that you're biased because you're the host of Bloomberg Technology, which you guys should just rename it to Bloomberg AI.
Yeah,
because that's basically
all that tech investing is now.
That's been driving the news cycle. It's been driving the markets. Let's bring Emily Graffeo into the conversation of Bloomberg's markets correspondent. And Emily, I mean, to Caroline's point, I mean, look, AI has been the market this year, last year. A big question is, does that become the market once again for 2026?
I wish I could say there's going to be some big new theme that we're all going to get to focus on for 2026.
No,
maybe quantum. I don't really have the crystal ball, but I mean, it's clear that from both the equity market side and then also the debt side, the focus is still on AI, because now we're not only seeing like equity strategists pile into this theme, but we're also seeing now anyone who's a debt investor, whether it's an investment grade company tapping into debt to build out a data center, or even some of those lower rated companies as well. So AI still the theme, but it's interesting that today we're seeing a pretty risk on day in the market. Usually if we were to get good economic data, we would see small caps rallying. We would see more like economic cyclical companies outperforming, but today tech is higher, financials higher, utilities are higher. But
what do you think? Why do you think the reason for that is? I mean, when you talk about 4+ percentage points on GDP growth, consumer spending holding up, business spending still holding up, and I understand you had some softness with regards to consumer confidence and maybe with business orders overall. But that still sounds like a stable economy, which I think would benefit small and mid caps.
Yeah, I think for today and probably tomorrow and next week, it's low volume. We're about 35% less volume than the past month right now. There's not really a reason to sell tech, particularly as we're focusing on AI for 2026 as well. I think traders are feeling like any of the traders who are still on Wall Street, still at their desks, why mess with what has worked already? And when we have a day where, yes, we got this consumer confidence data that's potentially signaling, what could come ahead, why would you sell on a day when the GDP surprises so much to the upside? There's not really like a reason to be bearish right now.
Apart from the Fed doesn't cut as much, and therefore maybe that's why Bitcoin's down a little bit. What are you seeing in terms of that trade?
Yeah, so that's it is surprising. I mean, we do have rates a little bit higher today, especially in the front end, which again could suggest if the economy is too hot, maybe we don't need a rate cut. But if you look at what some of the strategists were saying, even Wells Fargo weighing in saying, the economy's hot. Investors should pay attention to the positive trends. We believe the next 12 months will favor U.S. equities based on our expectations for higher U.S. GDP, broadening, accelerating earnings growth, moderating inflation, and improved global growth. At the end of the day, economic growth drives earnings, drives stock prices. So I think that's kind of the bet right now, less focus on this potentially keeping inflation higher and then keeping the Fed.
And is that what the catalyst is? The next catalyst for investors more broadly is going to be fundamental data. It's going to be earnings. It's going to be seeing which companies are able to drive forward productivity and revenue.
Yeah, I think that'll be a focus, particularly when it comes to AI. I know that you focus on this. There's been all of this CapEx spending on AI in 2025. Are we going to see it actually pay off next year? So
I think patience is needed.
But some of the rotation that we've seen over the last couple of months seems to suggest that the idea that people are moving away from, or not necessarily moving away, but trying to look beyond just the picks and shovels, the chips, et cetera, and start to look at maybe like the financial companies that will have greater productivity, or the retailers that will find better ways to use AI and this technology to get you to, buy whatever it is they want to buy. And it seems like a lot more people are trying to look for those opportunities now than maybe what they were, 12 months ago.
Yeah, you hear a lot of people, again, talking about the broadening out of the rally, that maybe this is the time that you want to pivot into the equal weight S&P 500, for example, over the cap-weighted S&P 500 that we all know. I will caveat, again, though, that people were saying that at the beginning of 2025, that this was going to be the big year of the rotation. And there was so much talk of sell America, particularly in April after the tariffs. And this has been another example of why would you short the S&P 500? Like, if you just buy SPY and you hold it, you're up almost 18% year to date, despite all of the volatility. So definitely people talking about the rotation, but at least in ETF world, people are still buying SPY.
I mean, there has been that frothier part of the market come out, though.
Oh, yeah.
The momentum trades, I mean, dare I say, quantum got a lot of the bubble pushed out of it. A lot of the power names suddenly got a little bit deflated. Also, the crypto space has just been really painful for the ETF landscape as well.
Oh, absolutely. So the Bitcoin ETF, BlackRock's ETF, it's one of the top inflow funds for the year, people piling billions into there. But I think it's a negative return right now. I mean, Bitcoin, down 6% year to date. That was a hot theme. If you go on BlackRock's website, they're still touting, one of the hot themes, buying Bitcoin. It really didn't pay off for a lot of people. If you got in at the beginning of the year, you're negative, you're down.
Emily Graffeo, telling it straight. Always love having you on. Thanks very much indeed. Look, let's talk a little bit more about the diversification trade. Look, real estate, we can sort of wade into, and I won't go into the AI side of it, even though there's a lot of data centers part of it, but it's a real tell on you, me, the housing market, how we feel. We've got the perfect person, Chief Economist Mike Simonsen of Compass is joining us now. And Mike, give us your read. We've just had GDP data that blew away people's expectations for the fiscal third quarter. Yeah, I mean, it was past tense. But what are you seeing in terms of the homeowner right now and the consumer right now? Are we resilient?
Well, we look at the transition to 2026 as really the start of the next era for the housing market. So we've been in 4 years of very few transactions, but relentlessly pushing higher prices. And what we finally see now in 26 is that the opposite story is emerging, where sales can finally grow, but prices are flat, so incomes are rising faster than prices, and therefore affordability starts to improve. So when you factor in the latest GDP growth numbers, that is pushing incomes higher, helps incomes grow faster than home prices, and helps restore affordability to the housing market.
I am curious, though, when we talk about this issue of affordability, Mike, a big part of that, of course, is also the issue of supply. And depending on the market you're in, certainly if you're in a city like New York or some of the other major sort of economic centers, the supply just isn't there. And it hasn't been there really for quite a few years.
Yeah, the supply story is really the main theme of the last 4 years. What we've seen is a tight supply in the Midwest and Northeast, but really growing across the Sun Belt. And that's because of a lack of mobility. So we've been moving from the north to the south for many years. In the last few years, that mobility has slowed dramatically. We're not selling in New York to buy in Florida.
Why?
We're not selling.
Why, Mike?
Because for one, it got more expensive to move. So home prices went up, insurance went up, all of the rates went up. So the prices moved, but also because we're hiring less, the hiring rates are super low. I am less confident to quit my job in Chicago to get a job in Dallas, or leave my job in New York to move to Florida for a new job. And because of that, I am staying in place. We've called it the Great Stay, and it's not just a housing phenomenon, it's also a jobs phenomenon.
Is there sort of a retirement narrative in there, Mike? And I raise that question because you have a huge population of boomers now that, in theory, would be aging out of some of the long-term properties that they've been in, and that normal churn you get as those folks sell those larger properties and maybe scale down to an apartment or to a nursing home or some kind of care facility. Is that not taking place?
It turns out it is happening very much more slowly than people anticipated. Really, boomers are staying in their homes longer. They're staying in their bigger homes longer, and they're not selling. It's been called the silver tsunami. At some point, the boomers are going to have to sell. But as of right now, boomers are net buyers of real estate.
Okay. And then what of Gen and the millennials, or the desire for them to move? In many ways, some people would say you see a New Yorker moving to Florida for the sun and for actually retirement purposes. What do you think gives the confidence that someone can quit a job in New York and go and get one in Dallas? As you were saying, that wasn't the case before, but doesn't it feel though the jobs market is up and away for 2026?
So, as of right now, the key that I'm watching for is the hires rate. So unemployment has remained relatively low. It's getting a little bit worse, but the hiring rate has been ultra low and hasn't yet turned the corner. So it could be that with a few Fed rate cuts and growing GDP numbers, that gives companies confidence to hire in the next year. And if we see hiring grow, then you can imagine that people will feel more confident to sell in the north, to buy in the south. And we'll see some evening out of that tight inventory in the Midwest and Northeast and the ample inventory across the South. It's been a real divided country.
Mike, I do want to get your thoughts on the impact of this artificial intelligence boom, whether it's the build out of the data centers or whether it's all those people who were lucky enough to invest in this space early enough and potentially are sitting on some pretty healthy profits. There's been anecdotal evidence about a bit of a comeback in the real estate market in San Francisco and Silicon Valley as a direct result of this AI boom. Are you seeing any data that supports that idea?
Yes, we are. And in fact, you really can't talk about the 2026 market without talking about AI. So there is the wealth effect. And what's fascinating in the local markets, you can see equity growth and stock market wealth impacts New York, of course. The AI specific boom in San Francisco, rents are dramatically higher in San Francisco. Home prices in San Francisco have been down for several years and have maybe turned the corner. It may be the only big market in the country where home prices look like they're recovering. They're still below last year at this time, but we can definitely see that. What's fascinating is in other tech markets like Seattle or Austin, we don't yet see that kind of demand. It's really specific. And at the same time, you can see that wealth, that luxury is outperforming. So high-end homes are outperforming in terms of sales numbers, in terms of price resilience, and that's pretty true across the country. And I think that is relatively related to strong equity markets, which are very much AI-driven. And so you can definitely see that across the country.
I feel when we enter 2025, the luxury bifurcation across markets, across economics was there. But 2025 also became more of the year where companies insisted their workers come back to the office at least 4 days, maybe 5 days a week. How has that played out in real estate?
What the data shows is that in the big cities, the return to office has actually flattened out. So there is a sort of permanent seeming remoteness, which in those cities gave benefit to the ex-urban markets, the longer commutes, because it's not doing a 5-day-a-week commute, it is doing a couple-day-a-week commute. And so those markets in those ex-urban communities do look like they are remaining supported in a world where there is a new higher level of some permanent remote work. The smaller cities, that's less true. There's more of a return to the office in the smaller cities. And so that is really a large city phenomenon.
It's been great getting your expertise, Mike. Thanks so much. Mike Simonsen is economist over at Compass Group. And it really does feel that at the moment, that the supply has just been so rigid in places like New York. And it's interesting whether SF or not has more supply on deck. But that point you made, that the baby boomers aren't moving on, and they asked, and just anecdotally, my parents want to remain in their larger house. They don't want to downsize. And a lot of that is because we're able to support them with different ways and means. They're able to get services, Instacart can deliver, we've built a
the world has
system around
changed
them.
a lot too, right? And then you also talk about, obviously, the whole issue of affordability, that you have a lot of people sitting on mortgage rates that really they can't compete with if they sell their house and go out there now. So there's a lot of factors that sort of play into this that has a big impact here on what's out there and what's available. All right, Romaine Bostic and Caroline Hyde in today for Tim Stenovic and Carol Masser. This is Bloomberg Businessweek Daily. We'll be back in a moment right here on Bloomberg.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. Developing story at this hour. Headlines right now on the Bloomberg Professional Service. A jet carrying Libya's military commander has disappeared from radar in Turkey. Now, Turkey says the head of the Libyan military, al-Haddad, was inside the jet. Now, according to a number of news services, Turkey has shut airspace around Ankara after this private jet incident and just getting word that contact turns out to be a Falcon 50 private jet that took off from the Turkish capital to Tripoli, Libya, was lost. Again, developing story headlines right now on the Bloomberg. U.S. equities, they're pushing higher. In fact, we are looking at the best level of the day right now, looking at a record right now with the S&P at 69.07, up 28, gain there of 0.4%. Dow Industrials up 113, up by about 0.2%. The Nasdaq Composite Index higher by 110 now, up 0.5%. Interestingly, though, a down day for the Russell 2000 Index. Small cap shares are declining. The index down now by about 0.6%. 10-year 4.16%, with the 2-year 3.53%. Gold up 1%. 44.88 the ounce, indeed a record there. Silver also at a record, up 3% right now, with a 71 handle on silver. 71.12. West Texas Intermediate crude up 0.6, 58.39 a barrel, and Bitcoin now lower by 0.5%, 87,828 on Bitcoin. Oil on track to snap a 4-day winning streak as traders weigh the U.S. clampdown on shipments from Venezuela against weak demand. Again, West Texas Intermediate crude up right now by 0.6%. Recapping, the S&P up 28 at a record, up 0.4. And for on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcast. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Charlie Pellet, thank you very much indeed. Welcome, Caroline Hyde, Romaine Bostic, filling in for Carol Massif, Tim Stenvik. We're talking really big picture, 2025, pushing 2026, the trends, which are AI, whether you're using it, whether you're investing in it, but also just what the consumer's up to. How do we feel? Is it a vibe session again, or actually are we feeling more constructive? The economic data today, really much better than the market had anticipated.
Absolutely, and it gets to this idea that people are still spending. There are some concerns about who is actually spending, but also a lot of questions, too, that I have personally about what people are spending on. Is it kind of the little things, or are they willing to spend on the big ticket items?
How's your apartment looking, Romaine?
Apartment, I don't know. I'm not in the market for any more furniture. I live in a New York City apartment. We're all
You're trying to
declutter. Yeah.
But some people are in the market for it. We've got a perfect guest.
All right, let's bring him in. Chad Spencer joining us right now from Ashley Global Retail. Great to have you here, Chad. Talk a little bit about just kind of first the state of the kind of home furnishings market. I always look at it as being one of those things that, okay, you buy a couch or a bed, once every 5-10 years or so. But are you seeing maybe a little bit more activity in terms of what people are coming into the stores or to your website to buy?
Yeah, it's great. You mean specifically product? I would tell you, just in general, the home business, we found the business to be really strong over the last 12 months. I wouldn't say that is necessarily the case throughout the industry, as I do believe there is some shifting happening in brick and mortar and online, and you're seeing that integration happening for brands that are poised to really take share in both spaces. But overall, I will tell you the overall industry in general, and specifically Ashley, we've had a fantastic year, and we're seeing traffic look good. People are coming to stores over the holiday period, December right now, even December in this holiday period, with what all is happening in the world and the craziness. Is that we're finding double-digit growth and in the sales and the business. So we're really pleased overall this year. I would just say in general, we found double-digit growth in sales. So the consumer is still optimistic, to your point, on what y'all were talking about. I think we obviously are providing, I would just say, extreme value for the consumer. But in general, I think the consumer is still pretty aggressive out there spending money and trying to make their home great.
So talk a little bit about how you make the buying process a little bit easier, more seamless for the consumer, particularly for an item like a home furnishing, where a lot of people want to sort of go into the store, sit on the couch, or look at that coffee table, et cetera, et cetera. But of course, we are a digital first economy, more or less, at this point. And I know you guys have rolled out some tools, including that partnership with Perplexity, that I guess is going to allow me to better plan out what I need to buy and where it's all going to be placed.
Well, I think you said it. We're a digital first economy. It leads everywhere. It is absolutely critical that you are in that space and you own that space. And you said it, Perplexity, PayPal, that whole partnership was really about us putting that foot forward to say we want to be a leader here. We've been a leader for so long. And if you understand agentic and what that means for the future of how commerce is going to be done, then we have to be in there, and we have to be, I would just say, leading the way to make sure the consumer can find the experience they're looking for. It's not, in today's world, you don't have to go anywhere if you don't want to your point. And what we're trying to do is to make sure that the experience in store and online absolutely mirror each other. And on top of that, it is best in class and it is top notch and it's first class. So the consumer ultimately in store would it's such a good experience that they would be willing to pay to come in and visit and be a part of the experience we give them. And we're working on all types of things to do that. And then online, we want it to be seamless. We want it to be simple. And we want it to be very, 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 I would just say, service oriented. And in our stores, the same way. And I just go, it's all about the experience. And that is what we're doing from the standpoint of how we, if you do come in the store, and how we tell those stories to make sure we're doing a quick job of getting the consumer where they want to be with the product they want to be online and in store. Chad. And then when you decide you want to purchase, there's nothing more frustrating going to I'm ready to purchase. I know what I want. Great. And it takes forever. So, we're really focused on a sub 10-minute transaction time because we do a lot of finance and stuff in stores. How do we make it quick? How do we make it fast? Because when it happens, she's ready to move on.
What about that financing element being able to be integrated in a ChatGPT, a Gemini, or indeed a Perplexity experience? The moment you're doing it with Perplexity and PayPal, but I'm sure you want to get into some of the other more widely used chatbots right now. And how can I get the full financial experience that way?
Yeah, you said it. I mean, the truth is financing is absolutely critical for all of our success. It's what allows you to provide a complete home. And it allows for, we do 0% interest for 60 months. It allows people to go ahead and finish that second, third, and fourth bedroom, or even just the kids area, whatever they want to do outdoor. And I just would say it is critical. And our teams, technology teams, already working on making sure that financing becomes available in these, these platforms that you're talking about. And we do it, obviously. We have our own, I would call, waterfall concept that really makes it really easy for the guest. And we really want to do it in three ways. Number one, the guests can do it themselves. Yeah. Right? They can be assisted if they want to be assisted, or we can absolutely do it completely for them. And so there's really a three-pronged approach we have at Ashley, which number one would be, how do you want to do it? And online, putting in more and more financial offers, and then making sure that it sweeps into this agentic space and then all these platforms. Really, it's got to be omni, or, it's just got to be, everything's got to be the same. And so we're really working right now with Salesforce, other people, to make sure that we are getting all of our ducks in a row to make sure financing is available wherever she decides to shop.
Chad, you're speaking my language. I'm someone who doesn't like to be talked to in this shopping experience. As a true Brit, Chad Spencer. It's joyous to have you on the show. Wishing you a very happy holiday. Thank you very much indeed. Chad Spencer there, Chief Executive Officer of Ashley Global Retail. We're going to stick with retail, Romaine, because things aren't as rosy for other players out there. I mean, Chad spoke very positively about what's going on at his furniture store, but that ain't happening in the luxury side in Saks. Yeah, certainly not. And this story really caught my eye. I mean, Saks Global, remember, obviously Saks is just a legendary department store chain, but they kind of had to combine with the last year with Neiman Marcus, Bergdorf Goodman, the idea that mashing all this up somehow would make them stronger together. Well, now they're reporting, at least based on what our Bloomberg reporters have learned, is that now the company actually mulling bankruptcy. Oof. And this just really after a year that they raised a ton of money for a turnaround effort. And it's that $100 million in debt payment that's coming due at the end of the month. We can dig into that with Eliza Ronalds-Hannon. She's senior reporter, deputy team leader for distressed debt and bankruptcy. And boy, this is distressed. How soon are we talking? What's pushed them over the edge here?
Well, it's important to note that Saks has been struggling almost from as soon as they completed this merger with Neiman Marcus, and that was only 1 year ago today. And by the middle of this year, they were raising more money from the lenders whose bonds were trading at about half of their face value in order to pursue a turnaround and give themselves more runway. So those lenders threw even more money after what they had provided in December to fund the acquisition, and now they're looking at a wipeout of much of that value. I am curious, Eliza, whether what ails Saks is indicative of something broader in the luxury retail landscape, or whether this is something that was more specific to how Saks itself was being managed. I think it's somewhat specific. The company did raise quite a lot of debt to fund this merger. Saks was struggling already, but this was swinging hard to try to really come back strong and dominate the luxury space, but it was an expensive effort. So if it didn't go really well from the start, it was always going to be that debt would become a burden. And one thing that I think is also specific to Saks in this case is that prior to the tie-up last year, they had legacy issues with their vendor relationships. They had to or chosen to pay a lot of suppliers late, and that created what's commonly turns into a death spiral in retail, where you're not paying your suppliers because you can't afford to, but then they're not sending you inventory, so then you have nothing to bring shoppers in, and then you have even less money coming in to pay your suppliers. And that's been a real issue for Saks for many years, but especially this year, or at least continuing into this year, and inventory has been low.
Anytime you lose suppliers, that's pretty much the kiss of death in the retail sector. I am curious, though, Eliza, based on your reporting, if there's any sense here that somebody would be willing to pick up this company, if not now, maybe out of bankruptcy. I mean, Saks, Neiman Marcus, maybe to a smaller extent, Bergdorf. I mean, some of the most iconic brand names when it comes to luxury retail. I can't imagine they're just going to disappear.
Right. There's certainly no reason to assume at this point that they would disappear. What is common in a bankruptcy like this would be that some of the lenders who did supply that more than $2 billion worth of financing last year, they are still the biggest creditors to Saks, and they could likely take over some or all of it in the bankruptcy process. Saks will certainly also run a sale process for third-party bidders, and those lenders will also likely run their own process. But Saks has been saying for months now that it is in the market to sell a minority stake in Bergdorf Goodman, and it has said, the CEO has said publicly that he was running into interest in that and that they had bidders lined up. But I think as things deteriorated, it becomes clear that, no bidder, even if they are lining up, is going to buy it. If the company's otherwise going to go into bankruptcy, they're not going to buy it before the bankruptcy. They want to come in and buy it in bankruptcy where it's cheaper. So that could still happen as well. Some of these individual names could fetch high bids from trademark or intellectual property investors.
Eliza, Ronalds-Hannon, fascinating story, and one that's going to unfold very swiftly for Saks. We appreciate it. I mean, Romaine, you say you can't imagine they'll disappear.
Yeah.
Barney's disappeared. I mean, I know they have a pop-up every now and then, ironically, in Saks, but where did it go?
Yeah, you're right. I mean, it's funny. I walk by the old Barney's building, which still stands. It's still vacant there. So, yeah, you're right. Obviously, sometimes brands can sort of wither away, but I don't know. Saks just seems so iconic to me that we wouldn't have a Saks. Fifth Avenue, Caroline? I don't want to live in that world.
Well, it means more people come near our office, right? Bloomingdale's is just next door from New York. This is Businessweek Daily.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. S&P 500 index holding at a record right now. We're looking at gains of 0.4% on the index, up 27, a record 69.06. Dow Industrials pushing higher, up 91, up 0.2. Nasdaq up 0.5%. The Russell 2000 index of small cap shares is down 0.6%. 10-year 4.16%. Gold up 1.1%. 44.91 the ounce, a record there. Silver also trading at a record, up 3.3%, and Bitcoin down 0.5%, 87,779. ServiceNow reaching a deal to buy the cybersecurity startup Armis, and a deal valued at $7.7 billion. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie, thank you very much indeed. And we are going to talk a little bit of, alternative assets. Are they even alternative anymore? Crypto went mainstream this year.
Oh, I thought you meant real estate. Sorry, crypto. Yes, crypto. Yeah, crypto's been struggling a little bit, though. I mean, but you think about that big run-up that we had earlier this year, right? And a lot of that seemed to be based on the idea of all these companies basically becoming, crypto treasuries, Bitcoin treasuries to be specific, and that was driving a lot of the demand for these coins, and then eventually that drove the price up. I don't know if that actually materialized in the way that people thought it would.
There was some regulatory tailwinds, Romaine. There was some other institutional interest, but the DAT focus has started to unravel. And I think that there's been an awful lot of buying of shares by these digital asset treasury companies rather than the underlying crypto asset that they were originally set up for. We want to dig into that a little bit more with now a CEO of a DAT, we're welcoming Maja Vujinovic to the show, CEO of Digital Assets. You, of course, are over at FG Nexus, which is an Ethereum digital asset treasury company. In many ways, this was replicating what Michael Saylor did with Bitcoin and Strategy. But at the moment, the net asset values have, well, the shares have been trading below them and you've been having to sell ETH, buy shares back. How do you see the outlook progressing for the rest of 2026?
Yeah, great question. It seems like you guys are focused on the right thing, where everywhere I turn around, anchors are focused on price of Bitcoin and is it going down, is it going up? But these are some really fundamental questions. And thank you for having me on the show pre-holiday as well. I think, look, there's been obviously DATs have exploded early days, and MicroStrategy kind of led that, let's say, innovation to some extent, right? And then BitMine kind of showed off in Ethereum. And there was a very short window. I mean, even when we started ours, I basically said to my team, look, there's a really short window of this kind of uptrend. Why at that time is because we were pre-Fed cut. And so when you are pre-Fed cut, obviously, right, we've had that pump, which is exactly what also BitMine was able to benefit from. And then after that, I think it deflated a bit. And part of the reason is that people just kind of started asking a most important question, which is what I asked from the beginning, which is, what do we want to be when we grow up, right? And I think these DATs are really important. As you said, you're chasing MNAV, which is important, right? It's ETH per share or Bitcoin per share or Solana per share, right? But at the same time, you really have to evolve as a business as well. And so to your point, we have obviously bought our shares back, which I think is a very strategic move, an important move to show to our shareholders that we're actually serious about keeping our stock at a certain levels. And we have done that, and we're actually very competitive in the market. Our NAV is now, much higher than most of the DATs in the space, right? Minus, let's say, BitMine and MicroStrategy.
Well, how much of a runway, though, do you need, Maja? Like when we start to talk about this idea of trying to sort of address that gap in valuation, do you have the space, or more importantly, are investors giving you the space to close that gap?
Yes, and I think this was an important part of our early raise, is to get the investors to understand the game. Granted, a lot of investors have come into the space thinking like, right, this is going to be a next MicroStrategy or, BitMine overnight. But, all of them have been struggling, right? Even BitMine and MicroStrategy have, right? And so we do have investors to understand that, one, this is a long-term game. Two, this technology is long-term, right? This technology is only taking off right now with stablecoins and tokenization, right? And so we do have quite a bit of runway. And I do think in the next 3-4 months is where you're going to start to see some interesting potential M&A happening in the space, right? Some of the DATs may be growing into real businesses, maybe some even merging with others, right? You will start to see that evolution.
Maja, which one are you going to be?
I don't know that yet. We are exploring a couple of different options at the moment because we owe that to our shareholders, but definitely something that we are working on daily, saying, right, is there opportunity to merge with somebody? Is there an opportunity, maybe we can get our stock back at a certain level where we get back on the market. So we are exploring different opportunities right now.
All right, Maja, really appreciate you taking time for us. Maja Vujinovic there. Joining us now to talk a little bit more about what's been going on, the CEO of Digital Assets over at FG Nexus. While crypto is not necessarily having the best year, at least on a total return basis, what do we call it?
Well, old school gold rather than digital
gold, real gold, having a phenomenal year. Gold up 70-80% on the year. Silver even outperforming that. In fact, having one of its best years going back to 1979. Joining us right now to talk a little bit more about what's been driving those moves higher and whether that continues into next year is Axel Merk, the President and Chief Investment Officer, co-founder over at Merk Investments. Great to have you here. Axel, talk a little bit about why you think we saw such a surge, first in gold and now more recently silver, which is now outpacing gold. Is that all pretty much an issue of what's been going on with the macro side of the economy, what's been going on with interest rates?
Well, I think the two components, great to be with you, by the way. One is fundamental and one is more human nature. On the fundamental side, the one aspect I think that's been underreported is that when trade is impeded, when a wrench is thrown into the global trade machinery, it's not just the flow of goods, it's also the flow of currency that's affected, meaning that foreigners are disincentivized to own treasuries, pushing up borrowing costs in the US. And of course, then the right reaction would be, because deficits need to be financed more domestically, to lower deficit spending, and instead what's happening is pressures increased on the Federal Reserve, and that wrench that's thrown, and ultimately that is what drives the exorbitant privilege, the ability to kind of borrow cheaply in the U.S., to invest for higher returns abroad. It's a process that gets disrupted, and because the gold space and precious metal space is fairly small, we can have outsized impacts. The weaponization of the dollar impacts it as well. The other side of that is the speculator. For several years, the speculator was busy with meme coins, digital tokens, SPACs. And historically, the speculator is in the precious metal space. They have come back. And the key contribution they make is that to add volatility. So we have a little bit of both. Fundamentals are impacted, the macro aspect, and then yes, they're technicals or speculators, whichever way you want to frame them.
How do you protect yourself? I mean, you're someone who's had an extraordinary year investing in gold, but also the mining and miners around that. When you're at this new peak, what do you do to protect your downside?
Well, for better or worse, we have a mandate. And so we are kind of stuck in what we do. But by all means, we do, of course, have the questions come up internally. How do you manage risk in this sort of environment? And I can't, of course, speak on behalf of what individual investors do. What we do on the mining side, which is a big chunk of what we do, is we focus on management teams. The scarcest resource is not gold or silver, it is good management. And so by being in the right stage of the growth where one supports them, one have somewhat of a protection on the downside. But of course, if you're in the space, if we were to have a significant downdraft, then by all means, yes, you would be affected as well. Of course, you can buy protection. The implication of that is, of course, that you underperform in the bull market. And so it ultimately comes down to what is your risk tolerance, what risk can you afford to take, and what you want to take. As far as we're concerned, we're mostly interested in communicating of the decision we ultimately make, so investors can make their choice based on that.
And you certainly have seen it in the appreciation in your assets. Axel, really appreciate it. Axel Merk, President and Chief Investment Officer, co-founder there of Merk Investments. Digital gold versus real gold. Caroline, who you got?
This year, you should have backed the hard stuff. Romaine, a joy as always. This is Businessweek Daily.
It's 2:53 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P, NASDAQ, they're all pushing higher. Looking at the S&P 500 index, 6907, trading at a record up right now by 0.4%. Indeed, the big question, are we going to close at a record? Keep it locked in to Bloomberg Radio and Television to get the answer. S&P, as I mentioned, up 28 now, up 0.4. Dow Industrials up by 0.2%. NASDAQ up 115. That index right now up by about 0.5%. Interestingly, though, on an update for much of the market, we are looking at losses right now for the Russell 2000 index of small cap shares. It is down 0.6%. Your 10-year 4.16% with the 2-year yielding 3.52%. Gold is up $47 the ounce, $44.90 where we stand. A record there, up 1.1%. Just talking with Axel Merk about metals. Right now, silver pushing higher by 3.3%. Crude up 0.8%, 58.45 a barrel on WTI. Under retreat for crypto, Bitcoin now down 0.6%, 87,735. Recapping S&P at a record 6907, up 0.4. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Charlie Pellet, thank you very much indeed. Let's take a look at some individual stocks now. We want to get under the hood and what's on the move today. I'm Caroline Hyde. We are joined by Bloomberg Television Markets correspondent Norah Mulinda. Norah, take it away. We've got 3 really interesting stocks and Novo Nordisk Wow, we are all into tablets rather than shots.
Oh, clearly, people are really interested in this oral pill that we know Novo Nordisk just got approval in the U.S. for this the pill version of its obesity shot, Wegovy. This is really great news for Novo Nordisk, especially as we think about it in comparison to Eli Lilly, its competitor. They essentially expect to get approval for their version of their oral pill by March. So we've got Novo Nordisk, ticker NVO, in ahead of Eli Lilly here. But I mean, it really is a stock that's been struggling. I'm taking a look at shares of Novo Nordisk on a year-to-date basis, down 41%. So I think that this is really a strong, important moment for this company, and you're definitely seeing shares, clearly investors are liking this. Shares are up as much as 11%. That's the biggest jump we've seen on a single-day basis since January for the stock.
Wow. And then we think about elsewhere in the landscape of the consumer and healthcare, Johnson & Johnson, when you're looking
Johnson & Johnson, ticker J&J. It's down for a different reason. We are seeing shares falling as much as 2%. This is after the company was ordered to pay about $1.56 billion to a Maryland woman. Essentially, she blamed the company's talc-based baby powder for causing asbestos-linked cancer. So jurors did find this in for the woman. They did see 2 units of its staff and the spinoff Kenvue of J&J. They were liable for failing to warn this woman about the fact that there was the baby powder was tainted with asbestos. So we are seeing shares that are down, reacting just a touch, down about 0.9% right now as we speak.
Wow, that legal hangover has been a long time for J&J. There is, surprisingly, as we tie up this year, a little bit of M&A going on. ServiceNow, biggest acquisition ever.
Right, and on a Tuesday. We are seeing this on a Tuesday. We saw that they did reach a deal to buy cybersecurity startup Armis. This is a deal that's valued at about $7.75 billion. We know ServiceNow is an IT management company. We are seeing this representing its largest acquisition to date, as you did call out here. ServiceNow will pay in cash for this deal for Armis, and it expects to fund the transaction through a combo of cash on hand as well as debt. So we're looking at shares that are down as much as 2.9% on the day. That's ticker NOW. This deal is expected to close in the second half of 2026, Caroline.
Yeah, interesting that Bloomberg had actually been there with the scoop last week about Armis, and really yet another success story for Israel. An Israeli group have been ex-military, really doing a lot of cyber work over there, and then building out this incredibly successful cyber company. But all of these platforms need to make big acquisitions in the world of cyber. If you're getting into agentic AI, we just think about the huge deal that was with Wiz and Google. It's like a trend there.
Certainly, and I've been looking at the share action for ServiceNow in particular. It really has been struggling over the past couple weeks, down about 10% over the past 2 weeks. So this is just an addition, clearly, to the overhang that we've been seeing for this company in particular.
Meanwhile, no overhang on the stocks more broadly, and you're seeing S&P 500 at a new record high more broadly, and we're seeing people starting to pile on the trades that have worked all year.
Right. It's so funny. We've been talking so much about the Santa Claus rally and whether or not we're seeing that heading into year end, but it's also really interesting the fact that we're seeing these double-digit returns for the major indexes, both the S&P 500, NASDAQ, and if you think about what earlier, this beginning of this year, end of last year, it seems as though we're in a place where it's not necessarily what the bulls were expecting, but it wasn't what the bears were expecting either. But it's really been an interesting year, and you're certainly seeing clearly a lot of optimism in the market so far as we end the year about double-digit returns higher.
Even though maybe we pull off some views whether the Fed will be cutting as much next year, with the economic growth going really rather more resiliently than many anticipated.
Absolutely. And another thing that I've been thinking about so much of this year is tariffs. I feel like I haven't heard the word so much in recent weeks, but that's something that I've certainly been reflecting on, especially as I talked to sources as well about tariffs. We've been having geopolitical concerns. There's been so much that's gone on this year. So it's interesting to still see us eking out such a strong gain to end the year.
And if yields are going to come lower, we only anticipate which direction the risk is going to go, and many anticipating also new IPOs coming to the market next year. Well, it's going to be a busy 2026. Thank you very much. For more conversations like this, do listen to our new Stock Movers podcast. Subscribe for a 5-minute episode on the biggest winners and losers in the stock market. Listen to Stock Movers on Apple, Spotify, or anywhere you get your podcast. That was Norah, Mulinda, helping count us down to the end of what has been Business Week Daily from myself and Romaine. It's been a joy steering this ship from 2 till 3 p.m. and we'll be handing things over. But have a wonderful rest of your week. And if you're working on Christmas Eve, if you're not, happy Christmas Eve. This is Bloomberg.